Before we start today's video, we'd like to thank Lithium Royalty Corp., listed on the Toronto Stock Exchange, ticker symbol LIRC. We'll share more later in the video. I'm Howard Klein from RK Equity. Rodney's my partner. I don't know if Rodney said it at the beginning, but if anyone here is interested in getting our newsletter, go to our website at rkequity.com and register your email there. And we publish the Lithium-ion Bull, which is a newsletter. We also have a podcast, audio podcast called Lithium-ion Rocks, and a YouTube channel called Rockstock Channel. So you could also go on YouTube and look up Rockstock Channel and subscribe and hit the notification bell, and you'll see all of our content. We have been in the lithium space for 14 years. I have been, and we've had some track record of success with Lithium Americas and Piedmont Lithium and Hard Rock very recently with Winsome Resources. But we have been big proponents of Hard Rock spodumene stories over all others, types, clay, DLE, or brine. And we maintain a scoreboard, RK Equity scoreboard, which has grown from, 10 or 12, 10 years ago to 50 around Tesla's battery day to now 200. And steadily, there's been fashions within that scoreboard, but what has risen to the top have been spodumene stories specifically. So I do note that all of the companies here are spodumene stories. So that's why I'm bringing that up. And they are in various hot geographies outside of Western Australia. There's been a lot of activity in Western Australia. So Blake, Lithium Ionic, is in Minas Gerais, Brazil, hoping to emulate Sigma Lithium's success.
That'd be nice.
And Simon, forgive me if I'm going to mispronounce your last name, Acapetta. Good enough? All right. Yeah. So he's the Chief Development Officer of Winsome Resources, which is following in Patriot Battery Metals' footsteps with a significant discovery in James Bay, but with the Livent merging with Allchem to form Arcadium. Arcadium is like Argentina and Canada. There are two big projects there, Nemaska and the James Bay project. So we think Quebec is, with Piedmont and Sayona, restarting production at North American Lithium. It's a jurisdiction that is going to be up and coming, as is Brazil, and as is Africa, where Amanda Harsis is the CFO of Atlantic Lithium in Ghana. You'll talk a little bit about that project, but they're partnered with Piedmont Lithium and Killian Charles. So also in James Bay, Quebec, backed by Cisco, the very successful gold company. And you all heard from Rodney Hooper, my partner, who will, I guess I'll ask you some questions, but you feel free to ask questions as well on that. But you all just heard from Rodney, but I guess I'll just start in order here. Blake, why don't each of you just introduce your companies just a little bit, and then we'll see where we go from there.
Yeah, sure. Great. I won't leave any time for anybody else. I'm going to do like a 20-minute. It's a hard rock asset, spodumene in Minas Gerais, Brazil. It's right next door to Sigma Lithium, which is a over $4 billion company now. We're looking to close that valuation cap. I'd say early stage, but we're transitioning into submitting for construction license and hopefully being in a position to actually construct the project starting next year and be into production in 2025. And that's aggressive considering we formed as a company last year. We've done 2 resources, a PEA with a $1.6 billion post-tax NPV and 121% post-tax IRR. One of the key advantages, I would say, I think there's so many great projects up here. You're going to hear all about them. But one great advantage of Minas Gerais and Brazil is the pace at which we can move. Drilling off these projects always has great pace, I think, with pegmatites. But the permit process, the timelines, there's a blueprint in front of us with Sigma. We can move quickly. That's where we're at. We're sort of that exploration into development phase story, looking to obviously close that gap with Sigma Lithium.
And your market cap currently?
250 million Canadian. Yeah.
And listed in Canada only?
Only in Canada. We have an over-the-counter listing for US, but generally, yeah.
Okay. Simon?
Yeah, excellent. The Winsome Resources has a flagship asset in the James Bay region of Quebec called the Adena Lithium Project. It was discovered less than a year ago, and on the back of a very good intercept, over 160 meters worth of mineralized lithium in pegmatite. It's actually attracted probably the majority of our human and financial capital over the last 12 months. If you believe the research analysts and their reports that they've put out to market, then you'll believe that a resource announcement is imminent. Their ranges are 40 to 50 million tonnes plus of maiden mineral resource estimate, which is significant on a global scale. It'll be top 5 in Canada. It is mineralised virtually from surface, kilometre strike length, open along strike and at depth, and is supported by a management team both in Canada and in Australia who are proven in exploring, developing, producing, constructing and running hard rock lithium businesses in Australia. Our chairman is Stephen Biggins, previous managing director of Core Lithium's. Our CEO is Chris Evans, previous chief operating officer of Altura Mining during its ramp up. My background is finance. I was the CFO of Core Lithium during its ramp up period, and we're very excited to be bringing this project into production over the coming years. Market capitalisation of around $200 million, with $70 million in the bank, or just under that as we speak. If you believe Petri Battery Metals valuation and you back calc what the market is attributing to our expected resource, then they're valuing us at somewhere between 15 and 20 million tonnes. Look forward to creating value for shareholders, I think, over the journey.
Okay, great. Amanda?
Hi, I'm Amanda Harsis. Atlantic Lithium has the Awoya Lithium project on the coast of Ghana. We currently have 35.3 million tonnes of resource. We're a near-term producer. We're going to be in production in 18 months. We have completed our DFS. We have our mining lease, and all systems go now to be shovel-ready by September next year when we get our operating permit. And we'll be going into production, first production in May 2025, with our main plant being built and ready in the first half of 2026.
All right. Killian?
CEO of Brunswick Exploration. We are one of the largest grassroots exploration company in North America, squarely focused on Canada. Our view is quite simple, that there is a discovery boom currently happening in Canada, including the James Bay region, as we've heard Winsome right here. We're predominantly focused on our latest discovery, which was announced 3 months ago, which is the Mirage property, where we've just wrapped up a 5,000 meter drill program. We're going to be doing a minimum of 15 in Q1 next year, 15,000 meters. But we're still pushing very hard on making new discoveries and are angling our portfolio to take advantage of that exploration boom as much as possible. Obviously, we're a bunch of Montrealers, born and raised, and as mentioned, part of the Osisko Group, which built the largest gold mine in Canada. Current market cap is around plus or minus $175 million, and we have about $15 million in the bank account. Thank you.
Jumping in here from the editing room to tell you about Lithium Royalty Corp. Lithium Royalty Corp is at the center of a global energy transition and manages a globally diversified portfolio of lithium-focused royalties in electrification and decarbonization. With 32 royalties on 29 higher-grade, lower-cost projects from exploration to production, LIRC covers all the bases with well-managed risk, ESG considerations, and a scalable royalty structure. Lithium Royalty Corp is traded on the Toronto Stock Exchange, ticker symbol LIRC. To find out more, visit lithiumroyaltycorp.com. Okay, I think everybody was here for Rodney's presentation. I'm going to ask Rodney a question, but I'm going to just make an observation that, okay, so Brazil, 2, Quebec, 1, Ghana, various stages of development, all around equal market caps, around $200 million. Rodney on the scoreboard, right? So I just mentioned that spodumene assets in general have risen, relative to other types, but there's a great disparity of valuations on the scoreboard still. And you talked a lot about the volatility in the immature lithium market. What do you think accounts for, what are some of the reasons why there's such a big valuation discrepancy among, these 4 companies and broadly within the
I don't know
universe?
if I necessarily can get in the mind of every investor, but I suppose to some extent, with respect to Atlantic, you've had some negative press out of Africa, which is unfairly spilled over. We keep trying to explain on the Fraser Institute the bottom three countries in Africa in terms of mining or investor friendliness is Zimbabwe, DRC, and Mali, and in the top three is Ghana. So they're on the opposite ends of the spectrum. But I think part of the problem, we're not part of the problem, Howard. I think the variability in investing is lithium is an industry in its infancy. It doesn't have a lot of institutional support at the exploration and development end versus the Albemarle's and so on of this world. When retail investors drive the market, they tend to look for short-term returns and tend to look for themes rather than play out, on the investment thesis. And I think that's, you should think that that institutional investors would climb in as companies evolve, but they don't seem to have got there yet. I think at some point we will reach a critical scale where it'll get the respect it deserves. I think you always, Rodney Dangerfield, whatever, and you can't get any respect. Lithium will get there. We're at the vagaries of individual private investors until that point comes. But I guess the other thing is hot areas and premiums for takeover, for M&A potential as well. That seems to have some impact.
Okay, great. Killian, as a Quebecois, and we talk about in Australia, we have a lot of rock music references in what we do. And Australia is like kind of crocodile rock, but not just rock music references, but just pop culture references as well. You've also had a lot of Crocodile Dundee Australians coming into North America, which I think is represented by Simon and Chris Evans. So that's between Simon and Killian, who has a better shot of succeeding in Canada, the Crocodile Dundees or the homegrown Quebecois?
Look, I think there's room for both, personally. At the end of the day, Quebec remains a particular nation, definitely in North America, being predominantly Francophone. It does have its quirks, but you've had a multitude of outside companies that have successfully exploited mines throughout all of Quebec. I think more importantly, the reason why, you're seeing a lot of interest in Canada, predominantly from the Australians, is that, they saw that exploration boom. They saw that exploration success, through 2010 to 2020 in Western Australia. The equivalent time in Canada is predominantly TSX listed company on the lithium side, been an unmitigated disaster with a number of, honestly, bankruptcies, whether it's North American Lithium or Nemaska. There was a little bit of a disconnect on that front from the average. Typically Australia is for ASX players and Canada is for TSX players. Having that disconnect on the equity side definitely caused a gap, and a number of Canadian projects or assets across all Canada be snapped up before we are now undergoing a bull market, a little bit of a bull run in terms of exploration in Canada. I think that's going to stay the same. I do expect to predominantly see a number of Australian companies because that's where a lot of the expertise remains. But again, personally, I believe that there's room for everyone here.
All right, Simon?
Yeah, that's very diplomatic. And I agree with everything that you've said, although I'd probably pick a different song, and I'd go with Thunderstruck, because I'd consider AC/DC Australian. And that's probably how I think about lithium over the last 3 or 4 years in Oz. And you've gone from effectively Greenbushes being, and still being, one of the best hard rock, if not the best hard rock lithium asset globally, to, a handful of new entrants into the hard rock lithium space, developed through the last cycle and a half in Australia over the last 4 years. That's generated a lot of wealth for domestic institutions, for retail shareholders as well, and it's, as has been alluded to, created a lot of expertise in hard rock lithium mining. Whereas still motivated like anyone is. to keep, rinse and repeating that success. So we look at other upcoming jurisdictions as somewhere like Western Australia becomes saturated. The Patriot Battery Metals led the way with their discovery in the James Bay region 12 to 18 months ago. And the discovery that at our Adena lithium project, with a very, very good intercept, one of the first intercepts has really attracted a lot of people to the region, and Aussies love to take a punt, and that's where many of us have headed.
Okay, that's great. And Blake, so you're listed on the TSX. How long have you been listed? And I want to ask just about, there's a lot of comparisons. I make a lot of comparisons between Australia or iron ore and spodumene. And iron ore is dominated by Australia and also Brazil. And Sigma Lithium has articulated a view that they could be like the Vale, in that category. But there's obviously some additional companies. So just what do you think about that comparison? But also just the evolution of your company, which I know a little bit less well from a financing perspective. And from here, I guess you have a resource and you said a PEA. What's the path to production from here?
Yeah, there was a lot in that. I'm not yet promoting that we're going to be Vale, but I'll leave Anna to do that. But I think we're in probably one of the most important hard rock belts in the world. It's emerging that way. It's extremely high grade, coarse grained spodumene, one of the most prolific pegmatite belts in the world prior to lithium actually having this kind of run. It produces 90% of the world's semi-precious gemstones, and that's because of the unique geology there. And I won't go into that too much, even though I'm a geologist, that people don't want to fall asleep in here. But basically, I think that when we look at this belt, what Anna's talking about is between ourselves, some of the companies around us, Sigma, there's probably 200 to 300 million tons already sitting there. There's a discovery rate of over 10 million tons a month in this belt. And so it's emerging as something that could potentially someday look like a Pilgangoora, Greenbushes type scale, and it'll start to get that attention. I think to Rodney's point, it's a young industry. I think that's a really good point, and that the business of it is actually only starting now. Last year was sort of the rush into the lithium space and traded like a crypto, and I think that's a difference now, is that these projects up here will be lower cost to produce than many. They're going to work in a market that pulls back, and demand will continue to be there for some time. We're into the real market now, I think. So I would say you're in the young portion of that. On the finance side, we're $20 million in the bank, and so we're well financed, and we're going through feasibility. And obviously now what we're trying to do is secure construction financing and get to a place where we can actually de-risk the construction of the project, build it quickly. And again, that is a key element about where we are in Minas Gerais. There's a clear path on permitting, and we have a blueprint through Sigma on how to build these things quickly, how to do it on low cost. Sigma built their project for $160 million. If we can even come close to that, I think it leaves a lot of room for success in our story. But I think that the space is evolving, and where we are in Minas Gerais and in the Lithium Valley is emerging as one of the top kind of lithium jurisdictions in the world.
And what's the capex and what's the production tonnage? Yeah,
so we're using, in the PEA, we use $230 million. 25% of that is contingency. It's the third largest cost in it. But let's say it's 230. And I think that is a very manageable capex for a company that's a $250 million market cap. And I forget your second question, but as far as
how many spodumene tons?
We're looking to produce 200,000 tons per annum to start, and very much phase our way in. So our approach has been get into production as quickly as possible, get into the cycle now. We know in this belt we're going to continue to make discoveries and grow. We're 33 million tons total right now. Reported, I think by January we'll be closer to 50 plus million tons, which is a key threshold for scale. And it'll just continue to grow from there. It's just an unbelievably beautiful belt for making discoveries. And if we can be something that produces 200,000 tons with scalability to go, to 400,000 or 500,000 tons, then your Liontown scale, your Sigma scale, these are the multi-billion-dollar assets out there. And so our approach is slow and steady, hit the catalysts, and keep executing on exploration.
And what were the expected operating costs?
Yeah, I think all-in sustaining costs were somewhere between $500 and $600 a ton. So
all-in sustaining costs.
All-in sustaining costs, and that's typical of this belt. And again, what I would point to here, OpEx cost about 350 a ton, which is exactly the same as a Sigma. What Latin is looking at, everybody in our belt roughly the same. CBL is a private producer, been there for 30 years, very much in that cost range too. So we have real proof of concept all around us, a blueprint around us. And again, I point to that. These projects will be low cost producers. And I think that's going to help in this current market as lithium pulls back and we actually build a supply chain around lithium.
Okay. There's been a lot of M&A activity in Western Australia, and Sigma has announced they have a process underway that they expect to have some outcome from at the end of this year. It could be an acquisition, it could be some sort of partnership. But Amanda has her company has actually received a bid that in Western Australia they've had public bids, and typically the stock price kind of goes to near the bid price, in some cases over the bid price, expecting that there's going to be an overbid. But in Atlantic Lithium's case, there was a bid. It trades in Australia as well as in London, and the news of the bid came out in Australia, and so Australia just assumed it would come near the bid price. So it was up 45% on that day. But your main trading and liquidity is in London. So when you guys woke up over here, you decided to trade it up only 20% or 25%. So you're now trading, I think, at a 25-30% discount.
Yeah, it's around 30% discount to the bid price. So look, it's a bit odd, but we continue on, and we are seeing over the last week a uptick. It's slow, but I think we'll get there. As a near-term producer with all-in sustaining costs of $675, I think the story will come out around that we are going to be in production. We're a partner of choice in Ghana. We have broken the back of our permitting. Our DFS is based on 75% actually real tenders, so these are all real numbers. We're growing our team, our operational team now. If you follow Twitter, you'll see all of our team in Ghana have been with Aramura, who is from MinRes, who ran Wodgina and Mount Marion, with the team, growing that team in Ghana. We've got a lot of good news stories coming up in the next 6 months, so I think we'll see an uptick in when people realise that this is real and it's happening. And the ASX, there's probably 125 companies with lithium in the name. It's very hard for a retail investor to discern whether something is rock chips over here or a real producer over there. But we'll be producing 360,000 tonnes a year. It's a globally significant asset. It's in the top 10 of producing assets in the world. So it'll get out there, and the story will kind of come home as we continue to get towards production.
But on the AIM, there's only like 5 companies with lithium in its name. Right?
Well, we're the top company on AIM.
So all you guys here in London, have a smaller universe to choose from, but you should understand, I think, the dichotomy in valuations across exchanges. The question I asked Rodney, I think I represent, there's an ASX premium, and then there's an AIM and a TSX discount. These things are ways in which, if you think that I grew up, Columbia Business School, efficient markets, like global, there are arbitrage opportunities. One would think you can't really. It's an immature market. You study this market, there's asymmetric risk, and you could find unusual dichotomies of things that maybe more overvalued or richly valued or need to grow into their valuations, and other companies very far advanced. So you want to produce, I think, 200,000 tons. Your project is how many tons?
360,000 per annum.
360,000 tons, and that would put you, I think, in
it's
the top
10 globally, number 3 in Africa, after Goulamina and Monono, but those companies are a little bit on standby at the moment, so we'll be top 1 in Africa at the moment. So we're right up there behind Liontown in terms of race production, but with capex of 185 million, and strategic partners in Piedmont Lithium in the States, and actually the Ghana Sovereign Wealth Fund, we're all right, and we're de-risked, and we're ready to go. We're actually on the way.
And I think on our scoreboard, I think there are like 4 major African projects that are listed. But 2 of them are in trading halt.
3.
3 are in trading halt?
No. 3 are listed.
Well, there's Codel. There's
2.
Codel
Codel as well. Sorry, yeah. So
right.
4, and 2
and only 2 are trading.
Yeah,
but
only
one's
2.
in Mali and one's in Ghana. But it's interesting that 2 are in trading halt because of to Rodney's point, the bottom of the Fraser Institute,
Yes.
DRC and Mali. Again, sovereign risk is not always priced into the valuations. In addition to the stock exchange, where it's listed. And what's your capex?
So CapEx 185 million.
185, and you're
250.
250. Okay, so 185 for
And that's what 10 years,
380,000. So the capex and capital intensity, and this is to Rodney's point, all of these are extremely low, by the way. Like, it's very doable, 250 versus a 200 million market cap, and likewise in Atlantic's case, if you look at DLE flow sheets, which have or Clay, $2.3 billion or $2 billion, off of a 200, you question how are these massive equity dilution risk in that case. In Atlantic's case, you have Piedmont funding a great bit of that, but you have
So
a 40.
Piedmont fund around 70% of our CapEx. We've got the Ghana Sovereign Wealth Fund now, who's a strategic investor, and they'll do another portion. Atlantic needs to find 38 million, and we've got an offtake process underway for some of our remaining 50% available offtake.
Killian and Simon, earlier stage, not yet out there even with a resource, and in Killian's case, just the current early drill results. So but we've seen strategics like Rio Tinto come in to companies in exploration in James Bay. So how could you talk about a little bit, any strategic interest, you've been receiving and what the nature of it is, and, strategically how you think about that at this early stage of development?
Yeah, I think it goes back to, mention again, immature, but it's also immature from the perspective of even the majors themselves. When I look at the pipeline of, let's say, Albemarle or Alchem or a number of other companies that are considered, the flag bearers in the space, it looks nothing like that of a BHP or a Teck or any other company where they will have that broad spectrum of, this is the next mine, and this is my project behind it, and that's the project behind it again. They have, growth till 2026, 2027, depending on the company. But after that, it becomes a lot harder to point where exactly that growth is going to come from. They've been, and rightly so, but they've been very much focused on acquisition of assets that need to be put into production right now. And so it creates this interesting setup when we start to look at anything a little bit further out on we'll call it the medium term. They have to remain buyers, right? We just saw with Piedmont, bring up Piedmont again, acquiring what is ostensibly not that great of a project in Newfoundland, but still having to build out that pipeline further out to continue growing, because that's what all these companies are saying. Yeah, we're going to keep growing forever. But it's not that obvious. And so they have to come in at a much earlier stage. And that's where, to bring up your point, Rio Tinto is trying to aggressively move into the space. There's a number of players, hearing a number of rumors, again, coming across the James Bay, which is one of the better environments in terms of endowment, globally speaking. I think there's a few across the world, Western Australia, Brazil, Quebec, those are be regions that will be well defined for lithium production. But at the same time, we're seeing a lot of these companies coming in a little bit too late. Now starting to say, okay, I'm going to buy this asset, and then where do I go from here? And being forced to interact with part of the market they don't have a lot of experience, junior mining, exploration. They really have no expertise on that. They're great mine builders, but it's shocking to me that I'll have a bigger exploration team than some of the majors out there, quote unquote, in the space to do lithium exploration. So it does give, again, it speaks to the immaturity of the market, and it gives a much larger stick, if you will, to companies that are at an earlier stage. And, Brunswick, we've been approached. We're not interested in doing anything of that nature at this point in time, because we have the capacity of advancing these assets ourselves. There's no real need to just vend them off to somebody else until we've captured most of, that value growth to our investors.
Simon?
Yeah, look, great question and some good points. I suppose even from my time at Core Lithium, being involved in some of the negotiations with strategics all throughout the supply chain, from the miners, the converters out of Asia, the CAMs and the precursor businesses, all the way through to the OEMs and the traders. Like that interest has been there for quite some time and has been growing. to some extent because we had lithium to sell at core in terms of Winsome, that interest is there as well from many groups wanting to shore up their supply chains, especially those that are looking to invest and have committed to invest billions of dollars in the region in Quebec. And it only takes a trip to Bécancour to actually visualise what I'm talking about. I don't think we really need to rush into it as a business. I think there's a lot to say about maintaining optionality. Our project is uncommitted. Our product's uncommitted. Our project is unencumbered. There's a lot to say about keeping and maintaining corporate appeal. We're very well funded. We've got access to capital all around the world, and we've got a project that is substantial. It will be mined in the next 5 to 10 years. A big part of the problem we're trying to solve is how we integrate into the North American supply chain and who we partner with through that process, whilst maintaining corporate appeal in the space. I don't think there's a need to. I don't think there's many businesses that will be able to help us in a material way at this point, given the experience that we have in house. But post resource, I think there'll be something substantial to start engaging with strategics about. But it's really about trying to find the ones that are willing to work with us as we develop the project and bring it into production. That gives me comfort in the medium to long term pricing. I think one of the topics of this session is pricing, and it's fairly complex. It's easy to talk to in a simple way, but when you break it down, as was alluded to earlier, it's an immature market. There are many moving parts. It's multidimensional. There are known knowns that analysts can map out. There are the unknowns that can really shift the dial on pricing. But with that being said, we think our project will be able to take advantage of the strategic interest that there is whilst maintaining upside to pricing.
Okay. Rodney, a couple of questions for you. We debate this all the time, the spodumene versus iron ore comparison, and also the multiple that these things trade at. The specialty chemical lithium industry, used to trade at, when Greenbushes got bought, Talison, it was at a 14 times multiple or something like that. But the valuations have gone down very significantly for even the producers. If you could just comment on, is spodumene, all of these projects are spodumene projects, and we don't have enough time to go into the vertical integration possibilities. So right now, the only option for all of these companies is to sell into China. Hopefully over time it will, Tesla, Rodney, just talk about spodumene versus iron ore, commodity versus specialty chemical.
I think, Howard, we've had this conversation. I think it all comes down to this. If spodumene, if the forward implied price is in backwardation like iron ore consistently is, they are going to trade it at lower multiples than we think they're worth. Because iron ore, consistently, the forward curve is worse. And if spodumene is seen in the same way, and if the futures market evolves that they expect a discount, then I'm expecting similar sort of valuation.
Okay, so you're not optimistic that lithium or spodumene companies, because there was also a thought spodumene companies should trade at lower multiples than, let's say, an integrated specialty chemical company like a Livent or an Albemarle. Do you subscribe to that, or do you think that even lithium carbonate and hydroxide producers should trade at spodumene or copper or iron ore like multiples?
Yeah, that's an interesting question, because of course the downstream capacity in China can be expanded easily. Albemarle and Livent still produce some specifically specialty chemical products, and at the high end. So if companies have negotiated contracts where they get premium pricing, and that again could be a China ex-China in that market, you could see those companies trading at premium multiples. But it's going to come down to how your pricing, your negotiated pricing structure works within companies. We've had Albemarle and others moving from fixed price longer term to cover cost of reinvestment to going to more index linked. And so that's going to matter. And then a question of if you have a China versus ex-China, will the future growth opportunities of the likes of Albemarle be better because they are IRA compliant and can expand their volumes at almost any amount and have a taker for it because China material is not acceptable outside of.
I think growth is a very important component to the multiple because I think lithium generally is trading like copper or something that much slower GDP growth, right? So that should be factored in, whether or not it's a specialty chemical or a commodity. Just the growth is not yet being factored in, and that could be just because there's high capital intensity and high volatility of earnings. We're now in a high interest rate environment, et cetera. So those are things. But so the other point I wanted to ask you, Rodney, is just this. Iron ore is a kind of controlled market, with 4 players mainly. And I've talked about a spodumene duopoly between, Albemarle, Minres, and Pilbara. But what do you think of that, given that there's a lot of discoveries of 100 million ton deposits, will this duopoly and this price discipline, in spodumene maintain itself?
I think you're still going to see a collection of a handful of players controlling a meaningful amount of the feedstock. That's, I think, how this is going to play out.
Chris
and we've
Ellison
seen that in the
Minres,
M&A.
Yeah, Chris Ellison and Minres, seems to think that, and Gina Reinhardt, want to control it. Any of you want to comment just on any of that? We only have a few seconds left. Blake?
I would just put on that. I think being cautious on pricing going forward is right. I think understanding that, maybe it trades at a discount, but that these are still high margin, low cost projects, right? That's what makes them particularly interesting right now. And I however it shapes out to a monopoly on the space, I think looking at these projects, the value they create, it's extremely important to look at those margins, even at these kind of pulled back prices in lithium. And there's still room to come back and still do very, very good business.
Great. Just one last thing I'll say is that because lithium relative to all these other markets is still a very small market. And if you believe like Benchmark Minerals Intelligence, if you want to meet, the forecasted 2030, 2035 demand, you need something like 80 new mines of 45,000 ton equivalent. And this is like 4 advanced stage, highly credible projects with highly credible people. But that's why the scoreboard is, has 200 companies on it. Maybe like any mining company, only maybe 5 or 10% of these companies are going to be mines, but maybe it'll be a little bit larger in lithium. But thank you all for listening to this great panel, and thank you to all the panelists.
Thank you.
Thank you.